Happy New Year, and welcome to the FarrCast. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week, and Happy New Year, all of you. We added several thousand listeners last year. That was remarkable. That was a big record. We about doubled, which is really very, very strange for the FarrCast, but we appreciate it. And we're glad to have all of you new listeners with us, all of our regular guests and some new guests as we try and cover Wall Street, Washington, and the world each week. It's the second day of January 2025. The biggest deal years ago was trying to remember to write 2025 on your checks. For a month or two, I'd still write the previous year's date. Well, hell, now you don't write checks, so I don't know when I have to actually write 2025, but I'm sure I'll probably screw it up. What we hope we don't screw up is our approach to investing, and we do that with dispassionate, dogged discipline. If you cover the 3 Ds, you'll be delighted with the results over the long term. The long term. See what I did there? Okay. It was a great year. We had returns of over 20% back-to-back years in equities. The odds of that happening year 3, not good. Not good historically. Could it happen? Sure, it could happen. And that's where I'd like to start this year. As we count our blessings, let's certainly count our prosperity. Let's count being born in this wonderful country. For those of you who are, we have our listeners overseas, and we invite you to come visit us whenever you want. But really, fabulous land of opportunity. And yes, we have very privileged lives here in America at almost every socioeconomic class, better than other qualities of life at the same socioeconomic classes around the world in other countries. This is a good place to be, and we're grateful, So lots to be grateful for, and as we look ahead, there's every reason to be optimistic, and investors, long-term investors, should always be optimistic. Here's going to be my one bucket of ice water for the morning. Jim Lebenthal is our first guest, which is a great way to begin the year, and I can see him laughing because he knew it was coming. He knew there's always a but. You always have to judge both, look at your upside opportunity versus your downside risk. And the one thing I want to caution everybody about at the beginning of this year is Malthusian conclusions, Malthusian thinking. And you can have, so Robert Malthus was the first economist, and he did a study in England that said the food production was not going to keep up with the growth of the population, and therefore everybody was going to starve in the future, and that the government was misguided to have soup kitchens and poorhouses and orphanages, and you should shut all those things down and let those people die because that was the natural order of things, and that would keep things in balance. Malthus was wrong, and I love that the first economist was wrong, but the first economist was wrong because he didn't account for the change in the variables, which is the fancy way of saying he didn't ever think they'd get any better at food production. Wrong. They got better at food production. Not only did it keep up with population growth, you got the gasoline engine and everything else, and all of a sudden, the United States can now produce 5% of our workforce, maybe 6%, produces enough food for everybody in the country, plus more. And we could produce more than that. So things change in those variables, and they didn't need to let people starve. What happens if you don't change your variables? You get to the wrong place, if indeed the variables change. So will this be another great year? Oh, I sure hope so. But when you hear things like S&P 500 earnings are going to be up 15% this year, says who? Well, says the strategist. Well, hell, I'm a strategist. Lebenthal's a strategist. We'll give you 2 different numbers. Are we right? I would probably say that neither one of us will nail it. If we're directionally right, Lebenthal and I will both be happy, basically. We'll both be happy. So keep in mind what I'm telling you first and foremost is, yeah, Malthusian conclusions are bad, but the thing you have to embrace as an investor, at least in the near term, always is change. In the long term is change. You invest for change, and you make mistakes when you think things won't change. Change makes you feel vulnerable. Guess what? We're vulnerable. How do we be less vulnerable as investors? There's one answer that I found, and only one answer. Give yourself a lot of time. Exploit the opportunity of time and the now what I call the inefficiency of time, because markets are so short-term, nanosecond focused about what penny changes in difference the next earnings quarter will make to a stock. I don't care. Couldn't care less. I want to know. Is this company going to make more money over time? And that's the way I'm going to approach my year. I'm going to own those sorts of companies. I'm going to be patient. I'm going to be dogged, dispassionate, and disciplined. And I'm going to talk to Jim Lebenthal whenever I can. He is a partner at Cerity Partners. He is a CNBC contributor and my wonderful friend. Happy New Year, Jim.
Happy New Year to you, Michael. I'm delighted to be on with you. You are also my dear friend, as is our mutual dear friend, Harry, the producer of this fine show. Congratulations on the meaningful increase in people listening. Thank you for all the listeners. I'm delighted to be a part of this myself. Wow, Michael, you have really set the tone for the year, have you not?
I don't know,
We're going to
Jim.
be at our intellectual. I think you have, in a way that you may or may not be aware. You have set the intellectual bar very high with the first FarrCast of the year going to Malthus and Malthusian economics. Okay, we're gonna meet you at that level. I think what I heard you say before you went into that economic dissertation is that there's every reason to be expecting that the year ahead is going to be good, but you got to give everything time. And I'm going to agree with both of those. And here's what I mean by that. The economy looks strong. The profit picture looks strong. The Fed is cutting interest rates for now. They probably won't go as far as everybody likes, but they are cutting for now. China is trying to get its economy going. We've got an incoming administration that is pro-growth. I know I'm speaking in banalities so far, but I'm painting the picture that you spoke of. There is every reason to feel positive about the path ahead. However, and this is the biggest message I would give today, is this is a moment where we have to wait and see. We have to wait and see after the inauguration what exact policies are put in place, what their intentions are, and then consider what their impacts are. We have to wait and see what comes from this administration. But to do that in the backdrop of being positive, especially if you give the time that you mentioned we have to give to our investments, Michael.
We know that markets hate to be surprised, and I think we will be less surprised in this new Trump administration. And we really need to listen very closely, and sometimes it's impossible, but listen very closely for the differences between posture and policy out of this administration. Is he posturing, or is he really proposing policy? And it's very difficult to tell. And sometimes only in the rearview mirror do you know exactly where we're going. Intentionally and directionally, we know that this president has been somewhat more of a protectionist, more of a make it in America first, tough on China, making sure other people pay their bills, more of a isolationist, doesn't want to get into too many multilateral agreements. He really only did bilateral agreements during his first term. So we know somewhat what to expect from President Trump. He has put on the top of his agenda that he's going to do something to quiet Ukraine. We'll see what he's able to do there, and we'll see what he's able to do in Israel. But he certainly has a very strong pulpit, and he does seem to have the world's attention. For better or for worse, you walk in the room and you're going to notice Donald Trump, period. And his approval ratings are exceptionally high in this country. So America feels good about this, and we certainly hope it continues. So, Jim, with all of that in mind, and that we have our Trump ears on to try and filter a little more closely, what do we do with that portfolio? S&P 500 stocks and closed near all-time highs. We've still got the Magnificent Seven that drove the train or pulled the train. Where do we put new money today? How do we think about the year, and what are you telling your clients?
Give me a little bit of runway on this, Michael. Let me start by saying this year is different from the last two in that there is some more degree of uncertainty about the path forward. If you remember the last 2 years, and really 2 years ago, going into 2023, everybody was convinced there was a recession about to happen imminently.
I was.
Yeah, no, well, that's fine. I mean, things turned out the way they turned out. But I think there is a degree of
It
uncertainty
turned
in the
out that I
global
was
economy.
wrong, is what turned out.
Well, okay, but good, but in a good way, right? If you wanted to be wrong a certain way, that
Yeah, oh
was the
yeah.
way to be wrong. For you and I who are long-term equity investors, and maybe I'll just skip the preamble and cut to the chase, which is that going back to where you started the show, if you are looking at companies that are generating good cash flows, that have excellent management, experienced management that guys like Michael and me speak to, and we assess, right or wrong, we assess their merits. If you're looking at companies and evaluating the strength or the weakness of their balance sheets, if you're thinking about their actual businesses, as opposed to just thinking of them as a collection of 3 letters or 4 letters, depending upon which exchange that you're trading on, if you think the way that I just described, you are going to hold those quality investments through thick and thin. You are likely, as I am and as Michael is, to put a veneer, and I'm only going to call it a veneer, of price sensitivity to these stocks that you buy, to these companies that you buy shares in. That doesn't mean that you're always going to wait for the cheapest price. That usually doesn't happen. But if you get great companies, as defined just a minute ago, both by me and Michael, at good prices, then what you're going to do in the economic backdrop and the political backdrop that Michael and I have been speaking about, you're going to hold them through thick and thin. And whether the market is up 10% this year, 20%, 5%, and whether the path that it gets there includes 1 correction, 2 corrections, 0 corrections, you're going to hold them through thick and thin because you are an investor in companies. You are not a trader in random collection of letters masquerading as symbols.
You sound like you're saying that it's going to be much more of a stock picker's year, Jim, than own the index, is what it sounds like to me. And that you really need this year more than others to go company by company and to know those balance sheets and to do your research and to steel yourself emotionally more than other years, that the time of riding the increasing tide of expansion is perhaps reached maturity, and therefore you have to dig deeper. Am I interpreting you? Am I translating the Lebenthal properly?
Michael, you're doing me a solid because you are getting to the conclusion that I failed to get to in my earlier treatise. Absolutely right. If you do that analysis that I was speaking of, and that you do so marvelously well, it is more likely to lead you to the other 493 stocks in the S&P 500 than it is to lead you to the Mag 7. By no means am I saying that the Mag 7 are terrible. That's not what I'm saying. What I'm saying is that in a growing economy where the fears of a recession are finally, hopefully, put aside, and you look at companies with growing cash flows, excellent management, excellent business models, and you put that veneer of price sensitivity on top of it, it leads you away from the Mag 7. It leads you to the rest of the 493 stocks in the S&P 500. That's what I believe. I believe the equal weight S&P 500 will outperform the market cap weighted S&P 500 this year.
Whoa, wait a minute. Ladies and gentlemen, now, I know what he said was wonky. The equal weighted is going to outperform the index weighted. The one that everybody follows is the index weighted. The disparity in those two has been so enormous that is a huge prediction by Lebenthal. But it's just so huge that I'm going to reflexively take the other side of it, Lebenthal, for $1
What?
Here. Absolutely. A buck says no way that happens. I don't know. The disparity is huge, and he has every reason to say it, but you've got to get around those big 7, which I can't figure out how to get around, particularly some of those that aren't that high priced. They still seem to be a magnet for money. Magnets for money. Magnets for money. We could sounds like a game show, doesn't it? We could do something like that. Let's talk to Colarusso and see if we can get a new show on there. I think that's what we need to do. All right. Jim, so that means he really does, if he's doing it, folks, that's a big deal. You have to look at all of those other 493 companies closely, do your research, and indeed invest. But remember, while he's talking about the upcoming year, when Jim invests, is not investing for just a year. Jim is investing for the long term, and he'd love to hold those companies forever. if the fundamentals bear out and continue to provide the argument for him to do so. Is that correct, Jim? I don't want to put words in your mouth.
100% right. 100% right. And I'm taking you up on your bet. However, not for $1, for a glass of fine whiskey together in person at the end of the year. Put a stake in this discussion.
That's even better. Ladies and gentlemen, Jim Lebenthal is a partner at Cerity Partners, contributor for CNBC, my great friend. Happy New Year, Jim. Thanks so much for starting the year off right for the FarrCast.
I'm so happy to be with you. Here's to a great 2025 for you, for me, for all of you listening. And thank you. Thank you for tuning into the FarrCast.
Thank you so much, Jim Lebenthal. Coming up, Dan Mahaffee will figure out what he thinks is going to happen in Washington and around the world when we come back on the FarrCast. Please stay with us.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr.
You can hear the sound of surf guitar, which means that it's time to go to Chicago, surf capital USA, and our good friend Dan Mahaffee. Now here's your host, Michael Farr.
Welcome back to the FarrCast, our special New Year's edition with just 2 segments this time, just 2 segments, but a little longer with Lebenthal, and we're going to have a little bit longer with my buddy Dan Mahaffee. He's vice chairman of the Dr. Scholl Foundation, a scholar at the Center for the Study of the Presidency and Congress, a Washington, D.C. think tank, policy think tank, nonpartisan think tank in Washington. Very, very important. Dan Mahaffee, welcome back to the FarrCast.
Thank you, Michael. Happy New Year. Good to be chatting with you.
Season 8. We're going to have to start, 8 years you've been doing this. We may have to call this the Farr Mahaffee cast or the Mahaffee FarrCast or the Mahaffee. We could just change
that. We'll workshop that a little better, but yeah.
What do you think? The Dan cast? Something like that? Dan cast for the downcast. We could do that. Dan, we've got an inauguration coming up here in a couple of weeks. We had what is being sort of somewhat referred to as a terrorist attack now in New Orleans on early hours of New Year's Day. So, Dan, I'm hearing it called, there was an ISIS flag in the back of this pickup truck. There were videos of this guy professing his allegiance to ISIS. There were, I think, IEDs, explosive devices also around New Orleans, and more explosives in his truck. He intended to do what he did. Are they just seeing some guy with a flag and they're saying it's terrorism, and maybe it's just a wacko who got the ISIS flag and has nothing to do with ISIS? What do you think? What's going on?
Look, I think it is clear that this is terrorism just by the nature of the act, driving your vehicle into a crowd on Bourbon Street, folks just trying to enjoy and celebrate their New Year's Eve, and then engaging in a gunfight with the police. The fact that he did don an ISIS flag on the back of his truck does suggest that he was either inspired by this message or using it as a reason for his assault. Now, look, in his background, he is U.S. born. He is from Texas. He is an Army veteran. Looks to like his background involved financial troubles, multiple divorces, unpaid child support. So what you have is the nexus of a person who is largely down on their luck, perhaps inclined to this message, and the amount of materials you can get for any cause, from ISIS to white supremacists to neo-Nazis to eco-terrorism, all this goes about on the internet, and any person can become inspired by this material. And that's where I think you look at the nexus of what inspired him. And when you hear politicians, saying things like, "Oh, it has to do with the border," or things like that, no, it has to do with how a person is inspired to violence. And this man, U.S. born, had nothing to do with the border. In fact, what would inspire someone to do that? And your heart goes out to the people who started their year getting a phone call from the New Orleans police that they'd lost a
Yes.
loved one.
Yes, yes. It's absolutely, absolutely tragic, unthinkable, and we're getting used to it, aren't we? Which is even maybe even more tragic. I don't know. You hear about these things that keep happening, and you just can't understand why. I mean, it's just
But it shows
absolutely.
that that the threat of ISIS and groups like it has not gone away. The war in the Middle East, these conflicts do inspire folks throughout the world to one cause to another. But again, be it a terrorist to a school shooter to and a cartel violence, all these things we see are threats. But as you rightly point out, we do almost get numb to them when we have this again and again.
But is there any indication that this was part of some larger plot? I understand that there was also a truck that was exploded in front of a Trump hotel. They were both rented through the same app, and people think that's significant. Uh, but
Right now, I'm thinking it's more coincidence than anything. The suspect that has been named in the Las Vegas explosion is a very different background. It happened to be an Army member as well, but the very different background from Colorado.
right,
And look, I think the New Orleans attack was deadly. The Las Vegas attack, to me, while this driver did lose their life and folks were injured, seemed more symbolic in ways, with a cyber truck parked outside Trump Tower,
right,
Trump
right.
Casino, pardon me.
Well, before we move on, truly our thoughts and our prayers and our hearts are breaking for those victims and their families at the beginning of a year that's such an optimistic time that's so filled with hope. It's just a horrible, senseless thing. Really senseless. You can't make sense of it. Okay, Dan, I am going to move now and ask you about the inauguration coming up. Will this be a standard? Uh, will Justice Roberts remember all the words this time? Or will he have them still on the 3x5 card? Will President Trump get directly to the office, and on day one, will that be day one or the day after, where he starts trying to get all these things done and going after the war in Ukraine and Russia? What do you
Mhm.
think?
Look, I think one, you already see that there's looks like a permit is being held for Capital One Arena the day before the inauguration. Trump wants to have a rally there before the inauguration itself. We haven't seen that. I think. Let's think though back to his previous inauguration, in the words of George W. Bush, who I believe said that was some weird blank after hearing the inaugural address. Put in what word you can imagine there. I don't think this is going to be, even if Americans want to hear it, a inauguration speech of reconciliation and tying the country together. I think it's going to be one that's more taking a victory lap and painting the image of his America First agenda. And I think, as you rightly point out, that will be some of these actions, executive actions he's promised. There will be stuff on the border. There will be, and we saw this within days of his last presidency. I keep trying to remind folks there is a last presidency as a model, that there were the Muslim immigration ban happened hours after taking the presidency. So there will be things like that that will be done, and that a president does have those powers to do so. And I think you see him exercising that. As you say, though, on Ukraine and Russia, our friend, erstwhile friend Vladimir Putin, has a vote on that. And I think what you see Putin doing is trying to take as much as he can now, but dig in a way that suggests, if you think in Putin's mentality, there's no way he's going to want to take the first offer from Donald Trump, just as a matter of principle, machismo, playground politics, whatever you want to put it. So Those items where he's talked about, ending the war in Ukraine in 24 hours, I don't see that happening. I don't see, or for example, bringing the hostages home from Gaza. That, again, seems to be a negotiation going down to the wire. And that also depends on a lot of what Benjamin Netanyahu wants to happen. So there's other players, other strong personalities at play. And while Trump will have a lot he can do on the domestic stage, the international scene will be much more complicated going ahead. And,
can he push something? Can he push some sort of a truce? Does he have the leverage to make something happen and reduce the conflict and quiet things down over there?
Well, sadly, the best leverage he has is to force some kind of Ukrainian capitulation, and that's not in U.S. interests, and it would weaken his presidency, frankly, just like Afghanistan weakened Biden's presidency.
Does he know that?
I think that message is being made clear to him by advisors. It's also being made clear by the Europeans, as much as he listens to some of them. But the Ukrainian capitulation would not be in our interests or in his interests.
Can I tell you that I love President Trump's message of America first? I think it's a fabulous message of America first. Where I disagree with the president-elect is what seems to be the unstated part B, which means to the exclusion, absolute exclusion of everybody else. Because I don't think that's possible when you live in a global world of instantaneous communication where we have global trade and a global economy and an interwoven global economic fabric. For everybody who wants everything to be made in America, if you're going to pay $15 an hour in America for little teeny parts that you can get in China and pay those people at $2 an hour, life's going to get a lot more expensive here. So you can't say I don't want to pay higher prices and still have everything made here. The economics of that don't work. So I firmly believe in America first. I don't think you will find anyone more patriotic. I love this country in ways I can't explain, but I'd like Americans to have a very high quality of life. And if I'm buying parts from better advantaged, economies and markets, I'm going to do that if it puts America at advantage.
And I'm going to continue this thread with the human side of that argument, which we've seen unfold over the holidays between the anti-immigration and pro-tech sides of the Trump movement. I don't know if you saw the kerfuffle where those who are very anti-immigration were actually openly disagreeing with Elon Musk and Vivek Ramaswamy over H-1B visas. And this question of America first, if you want America to be first, you're going to need to bring the best and brightest talent to this country. You're going to need those folks for our engineering, for our tech industry. But there are some who see America first as closing that border and getting rid of those immigrants. And that's going to be a question for our long-term competitiveness. And I don't think you will see America leading in tech or engineering if we don't have that talent coming from abroad.
You get economic growth in two ways, Dan. You have to have an increase in the number of workers and or an increase in productivity, but you add those two things together. If you don't have somebody to make the donuts, you're not making donuts. We haven't got technology to the point where we don't need workers yet. We don't have technology yet that can pick strawberries. We don't. They can't pick strawberries. They crush them. Can't do it. It's very difficult. So there's certain things that still require people to get in there and run. And if you don't have people, you're not producing. So you need workers, and we've got to have more workers. And Americans aren't having babies. We have no growth in the fertility rate. That's the economic term, of course. We don't have any growth in the population of the United States, U.S. population of people having babies. So
if you have that baby, we need the education system to make sure that in 15, 20, 25 years, they know what they need to do to be part of the workforce.
That at least they should be able to compete with all of the other people, particularly from Asia, that we're eager to hire because our people can't compete. Our education system's not producing the same number of engineers and scientists, computer scientists, coders, programmers. No way. Can't keep up with India and China right now. Hell, we're struggling to keep up with Russia right now. Okay, and it's our education system. Our kids aren't testing well. We rank something like 35th in the world in terms of math, reading, and science skills. 35th in the world. You tell my World War II father that we now rank below Poland. He doesn't believe me. There used to be Polish jokes. This was a bad time in the country, but oh yeah, Poland well outperforms. Much brighter kids in Poland, coming from Poland, of course. It's a matter of education. Anyway, old stories, but they were real. Dan, move on, please, with me to Iran. We haven't heard from Iran. We're hearing a lot of focus still on Israel and the war with Hamas, but what's going on? I always get nervous when I'm not hearing very much out of Iran.
Yeah, look, I think what you're seeing is Iran is dealing with several body blows when you consider how their proxies, Hamas, Hezbollah, as well as now the Assad regime, all these groups that they use to counterweight Israel in this strategic competition between them, those chess pieces, as it were, are off the table. And I think what you see in Tehran is a question of, one, how long could they afford to continue this struggle with Israel? And frankly, a fork in the road where you have, of course, reformers who do want to be more open to change their system. They understand the pressure they're facing from their population that has grown tired of the religious rules and economic underperformance, depression, in fact. At the same time, though, there are hardliners who say now, and will speak in more open ways than they've not before, that the nuclear program, Iran's nuclear deterrent, is actually now more important than ever, given how things like Hezbollah being able to launch rockets at Tel Aviv, again, is no longer part of the deterrent calculus they have. So I think that quiet you're hearing is because the leadership is really not sure which way to go. There are rifts between the elements within Iranian leadership. And how that is handled with, of course, Trump wanting to put far more pressure on Iran, working with Israel and the Sunni monarchies in the Gulf. There's going to be more pressure on Iran at a time when I think it's at a very decisive point in seeing its position in the region.
Dan, we've heard people say, oh, I think this will be the end of Putin because he'll have made some move that the world doesn't like. And good luck with an end to Putin. Can there be an end to this very right-wing, rigid regime in Iran? I know it's in a difficult spot, but can you ever see Iran transforming?
I can, because you see a population that is younger, you see a desire for change, you see the protests of young men and women who are tired of these strictures and rules, as well as an aging clerical judiciary and bodies that are certainly there to restrict people and apply these religious rules, but you see the people growing older and older who enforce them. So demography and time are there, but certainly, though, something that you understand a regime like that will not go quietly, and that will be the messy part.
Finally, let's get to China. As I've said for years now, you never interrupt an enemy when he's in the middle of making a mistake. Xi Jinping has undermined China's economy for an idealistic pursuit of a China that he hopes for, but it doesn't survive economically. You don't have an economy, you don't have a margin, you don't have a mission, says Sister Irene Krauss very famously. So, stimulus in China, can they keep the Chinese economy alive? Do they have to take Taiwan because they have nowhere else to turn?
Right. Look, I think the questions you have are again, this ongoing move by Xi. Do you stimulate the economy or not? Well, he's, cautious on stimulus, but you have some provinces now trying to do direct cash payments for the new year, things like that, to try and get stimulus. Belatedly, you have the message coming from down on high. Let's not try and detain so many businessmen. Putting businessmen in jail happens to have a bad effect on entrepreneurship. But look, the mindset is the ultimate thing. The malaise that is setting in around Chinese young people, the Japanification, 90s style Japanification of current Chinese consumption patterns, and the lack of animal spirits now among the entrepreneurial class, the young people. I think that is a problem that now goes beyond stimulus payments or real estate bailouts, that the spirit of the Chinese people has changed so much from what we saw that powered their economic growth over the past 3 decades.
So could there be, for the same reasons with that huge younger cohort in China, any threat to Xi Jinping?
I don't think there's a threat given now the whole security apparatus and censorship and observation, the sentinel state that they've created. I think in this course, the best, to circle back where we were in the conversation, the best and brightest Chinese who want to get out, give them a green card stapled to their college degree.
Wow. Well, we'll see and we'll watch very closely. It matters to all of us in terms of our economy and Wall Street and to the world. That's what we do on the FarrCast. I said finally, Dan, and it turns out that I misspoke.
And just one
which
more.
is nicer than saying that I lied. I've got one more thing I want to hear about, please. Mike Johnson going to stay Speaker of the House?
He does, not without a little last-minute drama from some of these people, but no one else wants to do it, and there's going to be incredible pressure from Trump world because any kind of sideshow really puts their legislative agenda on the back burner.
Dan Mahaffee, Vice Chairman of the Dr. Scholl Foundation, our senior political analyst on the FarrCast now in Season 8. Happy New Year, Dan. We'll talk to you a lot more this year. Thanks for staying with us.
Thank you. Looking forward to it. Happy New Year, Michael.
That's it for another FarrCast, ladies and gentlemen, as we cover Wall Street, Washington, and the world. Here we are in 2025. We're still doing it. We're trying to explain and bring you guests so that we better understand the year ahead and the world in which we live. It's a great pleasure and joy to do it. For Harry Jennings, our producer, everybody at Hightower and Farr Miller and Washington, thanks so much for listening. Please share us on social media. Let's see if we double our listenership again this year. For the FarrCast, and with a grateful and optimistic heart in Naples, Florida, I'm Michael Farr. I'll see you next week.
Thanks for joining us this week on the FarrCast, and thanks to our guests, Dan Mahaffee and Jim Lebenthal. We'll be back with you next week as we continue on with Season 8. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. Please be aware that anytime we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. And if we can be of help, please reach out to me at hjennings@farrmiller.com, and I'll be happy to put you in touch with one of our investment professionals here at Farr Miller in Washington to help you navigate your financial course. We are grateful for all of your notes and comments, and we try to respond to as many as we can. Please keep those emails and messages coming. Take care, stay safe, stay healthy. Happy New Year. We'll be back with you next week on the FarrCast. Wall Street, Washington, and the world. Farr Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, and SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr Miller in Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller in Washington and Hightower Advisors, LLC, and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr Miller in Washington and Hightower Advisors, LLC, and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors LLC or any of its affiliates. Farr, Miller & Washington and Hightower Advisors LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.